Okay, the question is, how much should I allocate to the international market, right? So you have a equity portfolio or stock portfolio, and you've been taught you always have money allocated to the international markets. Absolutely wrong. I'm just going to tell you that one right now. The question is, how do I know how much to have allocated and when? I'm going to answer those two questions, and I'm going to do it in a couple seconds. Hey guys, my name is RC Peck, and this channel is about helping people over the age of 50, men and women over the age of 50, get control back over their finances and their investing. And yes, it's very different because up until the age of 50, most people think of their wealth as their income. And something happens when you turn 50. Maybe it's 51, maybe it's 55. For some people, maybe it's even 45. What happens is people go, oh my God, I want to stop working one day and my wealth is not just my income. I really have to figure out what to do and how to grow all that saved money, all that accumulated money. And it's very different when you're over 50 because you want to have the choice to stop working. So this channel is one of these channels where I'm going to talk to specifically men and women over the age of 50. Now, in this specific video, what I want to do is talk about allocating some money to the international market. About 2/3 of my viewers are in the US, so this would mean whether you should be in the S&P 500 or in the international market. And then there are those that live overseas, and it'd be just the opposite. Do I stay in my home country or an all-international ex-US, or have some in the S&P? So the two questions I want to answer is, should you even be allocated overseas? And if so, how much? And I'm going to answer both those questions. And even if your money is all in bonds or you never think about investing overseas, this video matters because it's going to kind of start to show you the hidden strength or how to read the hidden strength in the markets. Okay, so let's jump into this. Number one, we are taught by almost everyone to over-diversify, right? I've been looking at people's portfolios for about 23 years now. And what I can tell you, if you have a big box advisor, you're going to be in 10 to 100 symbols, sometimes more, but never less. And that is absolutely being over-diversified. And that over-diversification is very expensive. The domestic international thing is no different. So people are often invested in the international markets because they've just been taught that that's how it's supposed to be. And that's an expense on your portfolio. So the first thing is just know that it's this dogma that everyone absolutely has to be invested internationally. And that's a mistake because there are long periods of time. There are long periods of time where international underperforms US domestic. And for the sake of this video, I'm going to talk about the video from the standpoint of a US investor, but if you live overseas, you can just flip it. So the first thing you have to understand if you're going to invest overseas is only invest overseas. And I'm talking about just buying an index. Only invest overseas if the overseas index is outperforming the US index. Like, it kind of makes sense when you hear it. Like, okay, well, hold on a second. Let me think about this, RC. So you only want me to buy international if it is clearly outperforming US domestic. Yeah, that's right. That's actually what I want you to do. Now you may say, I don't know how to do that. It sounds complicated. Or I don't have 3 years. I don't know how to get a degree and whatever. Stop. It's super simple. The first thing I really want you to understand, the only time you want to be allocated internationally is if international markets are outperforming US domestic markets. Okay, now there's a way of doing that. And I'm going to shift things up a little bit, and I'm actually just going to show you a price chart to just give you the idea of how to do that. So these videos are designed to start to nourish you and start to tell you and let you know there's a better way. Obviously, in a 5 or 10 or 15-minute video, we're not going to solve that, but you'll start to get the idea, oh my gosh, there's a better way. So let me do this. Let me just show you a price chart. And this is price chart. It looks a little weird. Now, you don't know what it is yet, but it's trending down. It's clearly trending down. What this price chart's actually doing is it's comparing US domestic against international. And I don't want to get into the math of it, but just know if that line is trending down, which if you look at the screen, it's trending down, that tells you that international is underperforming US domestic. Now that price chart is about 10 years in length. So you can see right there, there's been an entire decade where international has been an absolute drag on everyone's portfolio unnecessarily. And this is why over-diversification is so freaking expensive. So you can use something called a relative price chart. Now, here's the thing. I think I said I'm going to answer two questions. One, should you be allocated internationally? And two, how much? So number one is, should I even be allocated internationally? So the answer is, if that line is not trending higher, the answer is no. An easy way of measuring it is just saying, hey, these are called relative price charts. If the relative price chart from US domestic to international is not outperforming or trending higher, then I don't. Because you want international to be outperforming. And on the screen, you can see it's trending down, which means it's underperforming. If you see that line go up for 9 months in a row, then you can start to allocate. So the first answer is no, unless this relative price chart starts trending up 9 months in a row. So that's the first answer. And as you can see, that hasn't really happened. This is going to save tens and hundreds of thousands of dollars of your money and give you that much more over time because of how much international underperforms when it underperforms. Okay, the second question is, okay, RC, then how much do I allocate to international over US domestic when it's outperforming? So here's my answer. Start with, let's just say you had $1 million portfolio. It could be a $100,000 portfolio. You'd want to start with stepping in with 10%, right? So if you had $1 million, super simple, let's just say in the S&P 500. And after 9 months, international market, now that symbol is VEU. It's one of the tracking symbols. It's the, let me just get it right. It's the FTSE All World ex-US ETF. So you can buy VEU. You put 10% in VEU. So that'd be the first step, right? The first step zero would have been 0 in VEU, international ex-US. But if it had trended higher, right? So 9 months of it trending higher, you would have put 10% of your money in. So that's how you start the allocation. And you start the allocation in steps. And then you can wait either 30, 60, or 90 days and ask the same question. Is all world ex-US, which is that VEU symbol, still trending up relative to the S&P? And if it is, you put another 10% in. So theoretically, if you are looking at this every 60 days, you could be 100% allocated internationally. Which, by the way, if you live in the US, that would have you feel very scary because you've been taught by your big box advisor you'd never want to do that. But why not? I mean, it's 96% of the world population, meaning everything but the US. As of today, it's about half of the world half of the world's stock market. The world stock market today is about 100 trillion. 50 trillion is US and 50 trillion is international. So you're putting, let's say you end up with all of your money in international ex-US. You're in a $50 trillion company that represents 96% of the world population. That is pretty diversified. You don't need to be over-diversified. The big takeaway from this is you actually have to see what's going on. You have to understand where the signal is to make the shift. And you also have to understand how to read and understand where the strength is from the market. So wrapping it up in a bow, should you be allocated internationally? It depends. You want to wait for international to be outperforming. And then once it is, how do I allocate or how much do I allocate? And the answer is 10% every period. That can be a 30-day period where you reevaluate or a 60 or a 90. For easy math, go with 90 days. And you could end up with 100% of your money allocated to international, and international could outperform for a decade, just like US domestic has outperformed international for a decade. Thanks, guys, for being in my world. I appreciate you. Of course, this is not any personal financial advice. This is a YouTube video. You have to do your own due diligence. But if you do like this video, please check out my Clarity and Control course, which shows people it is designed for men and women over the age of 50 to get control back over their finances and their future, and to know that they're going to have enough. And if you like the video, please go ahead and like it. YouTube likes that. It helps with ranking. And I will see you on the next video. Also, too, if there's parts of it you don't agree with, things you like, things you dislike, go ahead, leave a comment. I read them all. I respond to them. Thank you for being in my world, and I'll see you on the next video. Okay, bye.